Welcome to Bitcoin Escape Plan. The topic of today's video is how real estate continues to rise in US dollar terms while dropping in Bitcoin terms over time. We're going to take a look at that trend as well as some other factors in the real estate market. But before we do that, as always, long-term viewers of this channel know, we like to take a look at the price of Bitcoin first, just to see what it's going to do in the next couple hours. And this is really important. I've been talking about this for weeks. This is the anchored VWAP on the 4-hour time frame, and we've just recovered the price since literally we lost it in November. We have just now reclaimed it after multiple attempts and failures to reclaim it. But as you can see, we have started dropping below after failing this 97.2K pivot. So it's very likely that we're going to consolidate down here at 95 and then bounce back up, possibly even as low as 94.5 for the 4-hour SMA. Though again, 4-hour SMA looks okay at the moment, still in an uptrend. We're not really going to talk that much about Bitcoin in this video. I'll talk more about Bitcoin in Sunday and Monday's videos, so make sure that you are subscribed so you see those. Again, today is mostly just about real estate, but this is important for us to kind of understand the general trend of where we are in the cycle right now for Bitcoin, which largely is just going to be a relief rally. I've said this in a million other videos. I don't think we're going to go above 106.8K. So having that in mind, what does that mean for the rest of the analysis? Well, first of all, let's go over to bitcoinescapeplan.com where you can see other pieces of analysis like this. This is the paid newsletter that I'm going over right now. So past ones, I've talked about gold in depth. I've talked about SPY in depth. I've talked about Ethereum stablecoins. And then today we're talking about real estate. And I'm really just trying to give you a way to correlate Bitcoin to the rest of the markets and the world. So go check out bitcoinescapeplan.com and subscribe and get all of these sent to your email. So US STHPI, which is just a slightly different version of this chart that I talked about before. This is US HPI. The main difference is this one actually goes back as far as 1975, which is useful for us because what I really wanted to find was other periods of downturn or consolidation because they're pretty rare on this chart. You know, on the HTI chart, that only goes back to 1991. So literally all you get is 2007, 2008, and then a minor blip in 2022. As we get into these other pieces of data later in the video, we're going to see that actually there's a couple more periods of consolidation than what's shown on these charts. But most importantly, what we want to factor in is here on this one. This is a 3-month time frame. I believe they don't give you the monthly for this chart. Or hold on, let me try. Yeah, it won't even show up. As you can see from here, we actually don't have that significant of a run towards the SMA. And 2022 is actually worse on this chart than 2025 was. On this one, however, this is the monthly one for HPI. This one actually does show 2025 as a weaker year. And most predominantly, we are now recovering the February highs. And it's going to be pretty important for us to see the next couple months of data to see, where did the rest of 2025 close? Did 25, for November and December, did it continue to rise? Or did we see it drop back to these levels? But what we're really paying attention to is how close it is to the SMA. Because, again, this chart only goes back to 91. But there's only one instance where it actually touches the SMA. And that's 2007 before the 2008 crash. So it's definitely not nothing. Here's the other example in 2020. So this is right after the COVID crash. COVID crash for everything else starts about here. We have a minor correction here, but the market continues long and strong because they start printing money. Where does that money go? It goes into things like houses. We're about to start seeing them print money again. So theoretically, where is that value going to go? It's going to go into houses. So I do actually have to say my opinion of this has changed. Last year, I was really viewing this as a downtrend and was expecting us to hit this SMA. If you're looking at the broader data, it's not the same story. It doesn't look like we are there yet. It looks like it's going to take a lot longer for the SMA to continue to rise before we actually have an interaction with it. So I kind of have to ignore what I previously thought was going to be a drop in the housing market towards the end of last year, or really not like the proper drop. Basically, I was anticipating 2025 as what 2007 looks like on the chart. When people talk about the 2008 financial crisis, they're talking about here, but what you needed to look at was here. That's what you needed to pay attention to, was 2007, when it peaked in 2007 and started dropping, and when it broke the moving average. That actually is such a, on both charts, it happens once. That's it. We don't even have another instance where it crosses the moving average on this chart. And I believe you would have to go back to like the 1930s to 50s to see another actual moving average inversion, because even, like I said, in the later charts that we'll go over, you can see a couple other periods, I believe in the 90s and in the 80s, where this one shows it a little bit, how it's at least like flat during the 80s. This would have been, gold would have peaked right here. Gold would have started dropping until 2006. And as you can see, housing just ate that up. So gold peaked here and then starts dropping until here. And then gold has reclaimed its new all-time high and rises. That causes real estate to drop. And that, for me, is really the most important overall trend that we need to be looking at, separate from the housing price of Bitcoin, but just what is the broader gold and real estate cycle? What is it doing? So what we're looking for is, when does it start to curve and need a correction? And there are some signs where it does look like that, where it looks like it's slowing down and curving and needs a correction. As you can see, the SMA continued to rise into that until it did flatten out and start dropping. But that was long after we had already seen a cross. And it is more likely, unfortunately, not very useful. It's more likely that it's just going to continue to rise forever. And we're going to continue to get close, but not quite touch it. That is, unfortunately, that's the most likely scenario, is that this is just going to continue to rise and we're not going to touch it. There are some signs where it looks like it is slowing, as I said, where I could believe at some point in the next 2-3 years that we will see another touch of the moving average. I was trying to figure out the correct way to really display this information. I talked about it in the gold video and newsletter as well, so you can go check that out. But my basic assumption is that gold is probably going to run until 2029 to 2030 roughly. And I was assuming that that was going to be combined with whatever slowdown in the real estate market. Now, again, it doesn't have to be like this. It doesn't have to be as violent. But if we even see a minor correction like we did in the 80s, in that small period in the early 90s, that would still correlate to gold continues to rise until the bottom of that expression, and then it changes. Although in this particular instance, that was not the case. Gold, again, had dropped this entire time period until literally 2006. So what do we have to infer from gold continuing to rip? That would indicate relative weakness for the real estate market. And that's when we can get into the really interesting data and trend, which is the price of housing in terms of Bitcoin. And I love this one because this is actually, I think that this is a tool that people can use that I haven't really heard many people use it this way. Everyone has seen like those threads or whatever where it shows the price of Bitcoin and or rather the price of homes in terms of Bitcoin, and how it is pretty clear over time. It just continues to go down. I think this chart only goes back to 2016 for whatever reason, but at that time, it would have cost you 403 Bitcoin in order to buy a house. And you can see already by the peak of 2017, it cost 17 Bitcoin to buy a home. Pretty sharp difference from 473 to 17 just in one cycle. That's a span of 2 years. a very short period of time for it to do that. So what we've seen now, and just to sort of establish like a baseline assumption from this, and again, I say this in the newsletter as well. So right here, this is January of 2018, right after the 2017 peak. For those of you who are not familiar, December 17th is the peak of Bitcoin, or right around December 17th, December 18th of 2017. That's when the CME releases the Bitcoin futures contracts, and that, is the sell the news event essentially that starts dropping the price of Bitcoin. So that local bottom that we see right there is the cheapest in terms of Bitcoin that a house will be until all the way over here in 2020 when it starts to drop again. So what does that mean for us if we're taking a look at this chart and trying to extrapolate forward momentum for Bitcoin? So this is established as the peak for Bitcoin. The price of Bitcoin during this time period continues to drop. So the price of Bitcoin in house value, because this chart also continued to rise, and this is the important caveat, and we'll take a look at this part of the chart as well to see if we can see any divergence there. But the housing prices continue to rise during that time. So, and while Bitcoin prices were dropping, the amount of Bitcoin that costs you to buy a house then went up as well, back all the way up to almost 60 Bitcoin to buy a house in 2019 from, again, just in the beginning of 2018, it was only 12 Bitcoin, 13 Bitcoin to buy a house. So how I interpret this data is I actually want to use this to figure out, okay, well, are we in a Bitcoin bear market right now? So what we would have to look at is, do we think that this is a bottom? Because this is the same thing. So this is right after this is the April high of 2021. This is the November, December high of 2021. And same thing, you can see that's a local bottom for the value of US homes in terms of Bitcoin. So if we're to take, this point here, which October of 2020, wow, that's all 2025. So it looks like this is lagging. They don't have all the data. So this will be very interesting. So as this year comes out more, I'm sure that we'll get more data for this. But what this is actually reading is that 2024 was the local top for the market in terms of real estate value. And now the price in terms of Bitcoin, again, is going up. So we don't have all of 2025 data for this, which actually makes this a little bit less useful of a chart, quite frankly. I hope that they update this soon, because what we really want to see is, do we find a local, in terms of Bitcoin, it would be a bottom, but for housing, that would equate to kind of like a top before the value starts to shift in the opposite direction, and the value would actually start to flip in terms of houses. So the general trend that I would anticipate we see for the remainder of this year and probably into 2027 is that the value of homes in terms of Bitcoin will rise, meaning the amount of Bitcoin that you need to purchase a home will go up. So that would mean that the house prices are going to go up in dollar terms still, and they're also going to go up in Bitcoin terms. So this point on the chart here is really the only other time where we can see the price is dropping in terms of dollars. And as we're all familiar during that time, or at least you should be familiar, that's also the peak of the bear market in 2022. Is between October and December of 2022. So housing also experienced a collapse during that time, or major problems with the banks and liquidity at that time. 2022 is a very important year on the charts. And as you can see, right around the start of 2023, right after the full progression of the Bitcoin bear market. So again, full progression is like from here to there. We see a rise in the amount of Bitcoin that you need to use to purchase a home. That correlates almost directly to when those bottoms occur. where U.S. houses continue to go up after that point, but they start to really go down in terms of Bitcoin because Bitcoin has regained its risk-on status, and the momentum has shifted to that part of the market. So what we're looking for on this chart is going to be, does the value continue to rise? How much Bitcoin it costs me to actually buy a house? And I would expect that to top by early 2027. And I would imagine it's probably going to get to about these levels. In the newsletter, I say somewhere between 6 and 7. But, if we use this trend as the example, so this is the top of Bitcoin, end of 2017. This is the local bottom, or I guess top, depending again on how you measure it. This is the best time for Bitcoin to buy a house, and then it starts to go against you. I would imagine it's about to start to go against us if we have indeed registered the local bottom in terms of Bitcoin. And then we'll see this same thing where we can't see earlier in this chart. If we could see 2014, I would imagine that 2013, 2014 was probably around here in terms of Bitcoin terms. And then this was a recovery right to around it. That's the trend that we can largely infer so far, is from 2021, the lowest amount of Bitcoin that you could use to buy a house, it went all the way back up to about 17, which is above this local bottom for 2018. So what we can infer then is the 2027 local top for Bitcoin value, just like this 2023 one and just like this 2019 one, will likely be at a bare minimum below these bottom points. But I think because of how this moved in the chart, there's a good possibility that it actually could be higher. And even this one might be the super relevant one where we'll shoot to about that and slightly past it. So possibly this one to about 8. And that progression would be completed again by early 2027, at which point Bitcoin will have started its recovery journey, and the value of houses likely will continue to rise as well. Like I said, we'll take a look at some other data that may disprove that towards the end of the video, but for the most part, this is reading as a continued recovery. Again, this is not showing the later 2025 data for housing market, so this will be an interesting chart to continue to take a look at. But broadly, that's what I would take from this, is we are slightly able to anticipate the relative bottoms in terms of how much Bitcoin does it cost to purchase a home, and we can infer the general trend for both the housing market and the Bitcoin market from this chart. So that's one you don't want to miss out on. That's bitcoininflationindex.com. I found that just for this video, but super, super useful. And that's what I would be looking at, is in the short term, if Bitcoin continues to drop, which, as I've already said, after this major move to 106.8, if we do get there, I would expect we're going to continue to drop after that. It just seems the most likely to me if we're actually taking in the broader trend, even though, again, we're going to chop on the monthly SMA for a couple months before we do that. But if that is the case, we'll see that reflected on this chart, where the value in terms of Bitcoin will be more and more Bitcoin that it'll cost you to buy a house. And then this chart just does not go back. Like, it doesn't show us nearly enough data to be able to anticipate anything more than cyclical bear markets. I don't think we can really factor in the business cycle, because this isn't even a full business cycle that it's showing us. It would need to show us from 2006 to here, and it doesn't. So let's take a look at a chart that does show us that information. So this is the Fred housing data, so slightly different than what we have access to on TradingView. And as you can see here, this actually does show us other periods of consolidation or drawdown. That's what these gray bars are. That's indicating, I guess, the local bottoming, or the period of bottoming for those trends. So I would assume retroactively we will get one somewhere in here. The Fed loves to do that. They love to release data way later than it is actually relevant, which is always fun. That wasn't what I wanted to click. So when we're looking at this data, you'll notice something a little bit different than the TradingView one, which again, we'll just take a look at that in case you are hard of memory. There's no rounding out after 2022. 2022 just continues to rise. But the median house value does not indicate that. It actually indicates that we've been in a downtrend since 2022. And this likewise doesn't show us the full data for 2025, so we may see that it trends upward. But this is very important. If the median is that different from the average, then we're actually showing a sign of weakness and continued consolidation at the moment, which means that even though the amount of dollars value, quote unquote, that is being put into the houses is continuing to rise, that's actually just probably matching inflation and is not actually raising across the market in terms of the value of the homes. So the cool part about this chart is it does show us earlier than 1991. It goes back to roughly the same data. This is the early 60s. But again, we see long periods where it's slow and steady growth and really just minor consolidations. I wouldn't even consider that a consolidation. I'm not sure why that has it reflected on the chart. And then this again is 1980 when gold peaks. We kind of see it reflected, but really it's just a steady rise on this chart in both instances. I really think it's only the last chart where we see it more meaningfully drop. But, this does not look dissimilar to this at the moment. So it's a period of relative stress for the housing market. And again, we have to take into context, Bitcoin didn't exist at this time, but gold did. So gold peaks here and doesn't reach those same levels until here. So gold is in a down trough during that whole time period, whereas real estate just continued to rise that entire time before the major correction. So really, and this, my opinion doesn't fucking matter in this regard. I don't really like real estate. I think it's if the only way for you to make money off of an asset is somebody else paying you to rent the asset, I don't really like that. Again, I'm wrong. I know that I'm wrong, but I don't really like that. I would prefer to just continue to buy and hold stock or gold or Bitcoin than to, continue to pay a bank or a financial institution for the right to live in a property that I won't even own for 30 years. It's the whole thing is insane to me. It doesn't make sense to me. But if we're to take a look at this data as we've been in a consolidation period since 2022, then what that means is we're starting to see the effects of value being stripped out of real estate and into things like gold and Bitcoin. Again, the value of gold will continue to rise until it finds a local bottom for the stock market, or real estate market rather, which for gold it did. It rose from about 2006 to about 2011, 2012, before it actually peaked and then started to consolidate again. And that was in timing with when the real estate market had fully bottomed. So when real estate market had fully bottomed and value started to return in terms of the housing prices, that's when we saw money flow out of gold and back into real estate. And that's what caused that major rise that we've seen since. So in 2020, when they printed all that money, a lot of that money went into housing, the same way that they had to print a lot of money in the 70s and 80s once they took us off the gold standard in 71. They had to print a bunch of money. And 1971 fucks up a whole bunch of different charts where the value of money becomes essentially nothing and the value of everything else starts to rise precipitously. So what we're looking for on a chart like this is how long does it stay consolidating? And where else is the money flowing? Because that's a pretty sharp increase. $100,000 increase from 2020 to 2022 is obviously nothing to ignore. That's more than a 25-30% increase on a large asset. It's easy for us in Bitcoin to say, oh, 20 or 30% over 3 years, like who cares? That's nothing at all. But most people who own a home don't own the full home. Say that they have a $300,000 home, right? They probably put down 40 to 50 grand or less, depending on if it was their first home. So they own a very small portion of that. They own whatever, like a sixth or an eighth of that value that's increasing. The benefit is obviously you can sell the home, and then minus your debt, you do get whatever the increase is. So that's how a lot of people will end up doing it. But, in the same circumstance, in 2020, Bitcoin was at 3,500 and it went to 20 grand. And if you only put in that initial investment that you had, that 50 grand that you would have put into a house at that time, that would be $1 million instead of 438, which again, you own a very small portion of it. And this is, I think, the thing that people get confused about all the time is like, again, if you have 50 grand to put behind a house here, that's still great. That's still really good. That means that your 50 grand just increased to whatever, 60 to 80 grand worth of value of this $440,000 house, which again, you don't own. The bank owns. You don't own it. You can sell it and you can, subtract the difference between what you owe the bank and what the house has increased in value, and it's still a good deal. But again, that same 50 grand that you could have put in the Bitcoin market at that same time in the housing market, that would be worth $1 million and you'd have zero debt, versus here, your original investment is worth, instead of 50, it's worth 60 to 80, and you still have more than $300,000 worth of debt, or whatever, in this case, approximately $250,000 worth of debt, depending on your mortgage payments. That's 2 years worth of mortgage payments. So maybe whatever, it's actually $200,000 worth of debt and, $40,000 to $60,000 worth of accrued value that you already own versus what is, still owed to the bank. Again, way different than you put that 50 grand into Bitcoin here and it's worth $1 million there and you have zero debt. So it really just comes down to, what do you want to use as your leverage instrument? And this is where I think we have to go back to this chart again. This is where I think it gets really interesting, is there's going to come a point in time where people realize, it costs less than 1 Bitcoin for a house. This is going to happen next cycle, I believe.